Hello, I'm Shaun Richards of Notayesmaneconomics and welcome to Halloween, or All Hallows Eve, I think it is technically. Today what I want to look at is the euro area and in relation to the way of European Central Bank policy. We've had quite a bit of news over the last couple of days relating to economic output. The reference point for this, for those that were following the press conference last Thursday, was the phrase broad-based economic growth. This was the sort of mantra of Mario Draghi and what he was presenting. Now, whilst this was true, if we were to look back to the latter period of 2017, there's been a bit of slowing in 2018, even when he'd said that. So in approximate terms, economic growth had gone from 0.7% per quarter to, say, 0.4. Yesterday, though, saw quite a marked change, because there was a drop to 0.2. Now, this starts to change things a little bit when you're trying to tell people about broad-based growth, because, for example, actually, then a lot. The annual rate's been dipping down. It was 2.7%. I think it's now more like 1.7%. So there are these consequences dipping through. Then there was something else, obviously, when you have an average across 19 countries. Some are higher, some lower. And if you look at the lower end, what we find is Mario Draghi's home country, which is Italy. That has dropped to no growth at all. Now, there were various sort of agenda-driven drews on that. For example, there was on social media, some blaming that on the new government, which I think is harsh because it's too soon. If it is going to impact and drag things back, then I think that that's too quick, frankly. What this does remind us is an ongoing problem with Italy, that if we look at it over this century, the euro area, approximately the same time span, the economy has barely grown. If we look at it since the credit crunch crash, it's still 5% smaller than where it was. And so there's an underlying problem here. For all the talk of reform and changes and so on, there haven't really been any. The story's the same. In the better times, Italy grows, yes, but by maybe 1% a year. Trouble is, in the bad times, it shrinks. And overall, that means the average has been very weak. So what can the ECB do? And the truth is, at the minute, not really a lot. And it finds itself in an awkward situation looking at Italy because, of course, it's reining back its support programme, their quantitative easing, that had a peak of 80 billion a month. It's now reduced it to 15, that's 1.5. As of the end of the year, that's going to 0. And that, again, of course, turns eyes to Italy. I'm sure some of you have seen the sort of charts put out that if you take a broad sweep here, essentially all the buying of Italian BTPs, that's what their bonds are called, over the last 2 or 3 years, has been, guess who? The ECB. So who's going to buy afterwards? And that's one of the reasons why the bond yield's risen. That's one of the reasons now there are issues of trouble, because that affects the public finances. The public finances are, of course, the issue. It's a debate with the European Commission, and so on. So whichever way you look at the situation there, you end up in a spiral. And is ECB policy right? Coming back to my home turf, does it fit? No, not really. And it doesn't fit either way, because reining back the stimulus, if you look at it from the official view, well, that doesn't quite work with Italy slowing down. And then on the other side of the thing, the philosophical or deeper issue is the fact, well, hang on a minute, has all this worked? All this money's been thrown at it, negative interest rates, and this looks really like the same old Italy the minute that the stimulus comes back from any sort of maximum. If we move away from that, as because I said before, some numbers lower, some higher, a bit of better news from France, 0.4% GDP growth. Although that, if we add them up, only makes 0.8 for the year, at least that's a little better from its point of view. And if we move to Spain, this is this morning's piece of data coming out, at 0.6, growth there is pretty good. We're back to here, you could call Spain broad-based economic growth under the ECB description, and you'd think fair enough. 0.6, about 2.5% per year, not as fast as it was, but that was because for these times growth there has been very quick. If you're looking for concerns, well, the issue there comes in the housing market. Same old problem in a way with Spain, you might think. which on an annual basis, house prices have risen by 6.8%. So if you look at the other measures, well, it's got a fair bit of growth, that's a lot higher. So what next for Spain? And then we come back to what really here is the fundamental problem, isn't it? How do you set monetary policy for a range of different economies? Before the fact that you get actually to within the economies, there's obviously different parts growing, say in the case of Italy, north to south. You then find across them all, well, which bit works where? Will we find, as we come to next year, that the ECB's sitting there and growth's drifted away? Those of you who watched my past updates will know that the monetary impact on the euro area has been dropping back. We've seen broad money growth drop back to about 3.5% a year. We've seen M1 growth come back. Now, some of the M1 growth fall is just simply the reduction in QE. However, nonetheless, the monetary numbers are what they are. They've looked like a break. The economy's slowed. Now, what next? I don't think, in my opinion, that provokes much of a likelihood here that interest rates will go up. The deposit rate at minus 0.4%. I don't think Mario Draghi has any particular plans for raising that, so that gets us through to the autumn of next year before we have anything else to think about. And then where does that go? What if this setback at the minute comes into something deeper? So there's quite a few questions here. And then this brings us to a further one, which is one that you could pose throughout this phase, which is one of the things that comes on each European Central Bank press conference is Mario Draghi talking to us about structural reforms. Occasionally he claims a few that have happened, but the constant theme here is more is needed. And the bottom line is essentially that. Where have they come? There's been very little sign of them in Italy. The Greek issue didn't really happen there. A bit more hope for Spain. There has been an improvement, but then maybe there are troubles there too. So there's quite a lot to think about as we look at the pattern, and that's probably why, for example, recently we've seen the euro drift lower. Questions are rising, what's going to happen next? There is a contrast, for example, if we look at the headline exchange rate with the US dollar, with the US economy that's continuing to go forwards. Not the ECB's fault, though, perhaps, this one, because, of course, we've had the Trump fiscal expansion that might keep the American economy going forwards a bit. More debt, but the economy is growing. Whereas ECB hasn't really got that sort of help on the fiscal side from the euro area authorities, because all we're seeing them there is wanting people to restrict any fiscal flows. This is the problem with Italy. There are issues with Spain, although they're more relaxed about Spain because the economy is growing and it's a bit hard to get on its back when that's happening. Issues with France. And of course, Germany is running a surplus. So a completely different strategy is being employed here. And then that does pose a question. If we do see a further slowdown, what really then does happen next? There have been some signs of that from the market PMIs, that the fourth quarter might be weaker still. Now, because of the fact that we had a drop from 0.4 to 0.2 as it is, maybe that'll just stay the same. But as you can see, the outlook here is quite changed. And if we now skip to the implications of that, say for here in the UK, then there is an issue for us. If we're planning to export and that sort of thing, we want our nearest and indeed biggest trading partners, if we take it collectively, to be having a good run, and they're not. Thank you.